Hi folks, Lee Gettess here with the Market Sense for the week of July 10th, 2018. Hope everybody had a wonderful 4th last week. The charts in this presentation are provided to us courtesy of Gettess and their Trade Navigator software. And looking at a weekly bond market chart here, I think they're kind of at a critical juncture. This is interesting. I love it when markets are interesting. They sort of kind of tried to poke through these old highs here. Since they made the big move down, we've got a swing high here, and they've tried to tickle it and pop through it here a little bit, and they're not doing very well. That could mean they're going all the way back down, but what it probably means is that they're in no particular urgency or hurry to go higher. And chances are we're going to back off at least a little bit. It probably doesn't mean they're going to the low. It probably just means they're sideways. But it'll be interesting to keep an eye on the momentum indicator down here as the RSI gets down closer to its moving average. We'll see if that can hold right around this 144.24 area, or possibly down here 143.26 or so down at the lower moving average. If it hits one of these with this indicator kind of kissing its moving average, that's a possible indication for at least a bounce. I really thought they had a chance to go higher, and they still do, but going to these highs and not really showing any follow-through is, not a very positive sign. But again, they seem to be ignoring the Fed raising interest rates. They're certainly not going down at this point. Again, they could, but it just doesn't look that way. I think sideways is the most likely, and maybe they'll still try to go higher. Stocks are, of course, in a much different situation. We've since this low here, we're making a series of higher swing highs, well, and higher swing lows as well. And they are now up there testing this old high, trying to break through that, which would put them back in the vicinity of this whole high from much earlier in the year. Now, this is actually a fairly bullish pattern here, but we have to look at it in the context of this big move early in the year. Really, it's all sideways. I mean, if we just looked at this last few weeks here, it would look bullish, but they don't show a lot of follow through. They don't look real enthusiastic. The ranges are shrinking. I think they might have trouble up here in this little range. Let's call it 27.85 to 28.10. I think is this old high. Right in there is where all the resistance is. And boy, I know this sounds trite, but resistance is resistance until it's broken. And despite how good they look getting up here, it's still resistance. And unless they blow through this and go challenge the highs for the year back here, they're still just sideways. They're not really showing that much enthusiasm. We do have support quite a bit lower. This is 27.42 is the middle moving average that we thought might act as support this week, and instead they've just jumped higher to begin with. But again, if I could explain something on a daily basis, they've been moving higher overnight and then sort of screwing around during the day and then rallying again late to close higher. Now that's good. They could go up that way, but that's not the most bullish pattern. A market that's really bullish on a daily basis will kind of either open lower or go lower early and then turn and rally for most of the day and into the close. Since that's not how they're behaving, I'm just not that excited about the price action. They could go up, they could go higher, they could take out these highs and go, but they're not showing that much enthusiasm, so I'm, less than excited about it. And I think they might run into resistance in this area and turn back down from here. If they don't hold 27.42, they could be down testing the 2700 area fairly quickly, although it doesn't have to happen this week. So that's what we've got for you today. I hope you can find something profitable